In 1971, he went on a pure fiat money standard for the first time ever. That was an experiment, right? And so that's where we are at now in 2023, is that experiment failed. And then the whole fiat money experiment going back 300 years to the creation of the Bank of England we can say now has failed. It failed. It completely failed. So this is the discipline that comes with having the scarcest money ever created in the history of the world. And so hash rate is the computational power that is being built out over many of miners, as they're called, around the world, who are investing in additional hashing power, computational power, to as part of pools of these outfits that are trying to get every 10 minutes. There's an emission of Bitcoin, and so it's all about the Bitcoin value is greater than the energy I'm using to get that Bitcoin. And there's a whole dynamic going on, like gold mining. Gold mining, there's a cost to gold mining, then you sell the gold, right? So then Bitcoin mining, there's a cost to electricity, and then you get the Bitcoin. And then if you can sell the Bitcoin, at a profit or not profit, or hoard the Bitcoin, or whatever you do with the Bitcoin. So there's a whole industry going on. It's backed by energy, essentially. If you say Bitcoin isn't backed by anything, well, it's backed by energy, and energy backs everything. Energy is life, right? So it's just like it's all focused into creating the hardest money ever in the history of the world. And that money has all kinds of fantastic attributes that can be used as money, the best money. And it demonetizes other forms of money, like gold and like fiat money. So gold demonetized silver, right? Silver is not used in money as it used to be anymore, because gold was kind of a superior form of money. So Bitcoin is demonetizing gold, right? Gold is not going to ever do well against Bitcoin. Bitcoin will always outperform gold, and by a lot going forward, because a lot of people, you see this in the ETF market, the gold ETFs and gold. Let's see, now you're seeing some reallocation out of those gold ETFs into the Bitcoin ETF. I think you'll see the same thing in REITs with the real estate investment trusts. You'll see the same thing in the S&P ETFs. All the ETFs are all packages and bundles of various stocks and bonds and commodities will all eventually kind of migrate over to the Bitcoin ETF.
Bitcoin OG Max Keiser believes a Bitcoin God candle is coming, a phenomenon which he predicts will propel Bitcoin's price to over $100,000. This forecast comes on the heels of a remarkable surge in Bitcoin's value over the last few days, with the cryptocurrency soaring from $50,000 to well into the $60,000s. In his latest interview, Max shared his insights on the enduring resilience of the Bitcoin market amidst its notorious volatility. Whilst concerns over price fluctuations persist, Keiser's perspective sheds light on the long-term stability of Bitcoin rooted in its underlying mechanisms such as hash rate and the principle of scarcity. Keiser's analysis goes beyond mere price speculation, diving into the transformative potential of the Bitcoin ETFs and how the entry of institutional giants like BlackRock have completely changed the game. Make sure to stick around to the end of the video where Max reveals why he believes Bitcoin's price will explode before the April halving. Also guys, if you want to stay most up to date in the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Max Keiser on why he's incredibly bullish on Bitcoin but worried about an upcoming stock and gold crash.
Yeah, the thing is, if you've held Bitcoin for 4 years, the minimum of 4 years, no one's lost a penny.
Right.
So any volatility is within a 4-year cycle. And within those 4 years, it's always hitting new highs, number one. And that's if you're looking at price. If you want to take this a step further, don't look at price. Look at hash rate. Look at the computational power that's going into the network. That's always been going up at a 45-degree angle for 12, 13 years. It's the amount of computational power that's on the network that's essentially running the network. And the whole system works on something called proof of work. And that proof of work is that every 10 minutes, a nonce or a target number is discovered through this massive lottery using something now at the hash rates at 520. I think that's 5.2 quintillion calculations per second. And the first one that guesses this number, which is at or below the nonce, is eligible to get the Bitcoin for that cycle, right? So it uses a lot of energy in this, and there's an arms race because people want the Bitcoin. So they keep adding more computer power to the network. The energy usage keeps going up, But again, it's good because you're drawing energy away from other sources like the Pentagon, like the fiat money world, like all the boondoggles, like, here was a, something on Zero Hedge, which we looked at just the other day, which was kind of humorous, which is the gambling habits of transgender monkeys on meth. So Rand Paul exposes a $900 billion in government waste. So, $900 billion in government waste, and
to find the gambling habits of transgender monkeys.
Yeah, just one item on this list, right? I mean, the list has quite a list of esoteric and arcane things of just basically nonsensical boondoggles, but there's no end to the amount of malinvestments that one can make if you have corrupt government officials and a printing press.
Right.
So if you go in there and say, we need to study the gambling habits of the transgender monkeys, because it's going to help us win the war in Russia, and some senator has dementia and is drunk and they're at lunch and they'll say, okay, here's $1 billion, they'll print it, and they won't think twice about it. But if it was actual money like Bitcoin, gold obviously would be a similarly prohibitive form of money that people would not just throw away. And under a gold standard, there's some benefits to that.
But we went off the gold standard in 71.
Every time there's a war to pay for, or debts to pay for, we say, well, we can't be on the gold standard now. We have to go on a money standard. And the Bitcoin ETF has already done record-breaking numbers in building capital under those ETFs. And Larry Fink is now over there, BlackRock. Their Bitcoin ETF is worth billions of dollars just in the first few days, and it could very easily be worth 20 or 30 or 40 billion dollars. And the Bitcoin market cap could easily go from 800 billion to a trillion to 5 trillion to 20 trillion if the total addressable market is 400 trillion. So the possible price appreciation would be much higher, but you'll do see volatility. That's why I focused on this hash rate, because the hash rate tells you the commitment of people who are actually taking the risk of mining, right? Those are the risk takers in this equation, not necessarily the speculator. People are used to the price speculation on stocks, and that the hedge fund guy is taking risk and adding liquidity to it. And that's the way they kind of look at that market. But in the Bitcoin world, it's the person who's buying and investing in the computational power that's taking the primary risk to drive the incentive model, that part of the incentive model of the network. And those people have not backed away. They continue to pour money in, price up. This is the point. No matter what the price is, people are still throwing money at the network. That's my price. That's kind of the point that I'm trying to make here, is that price doesn't tell you the story as clearly as hash rate tells you the story, because hash rate's telling you that no matter what the price is, people are throwing money. They're not discouraged. They're not deterred, because you understand how it's going to demonetize fiat money and gold and these other things. And once you see it, you cannot unsee it. So any dip is an opportunity.
Yes.
And speculators who are pushed around by price they come into it, they go out of it, and they don't understand why they're in it. I mean, one thing about the ETF market is that's going to bring in a lot of people who don't really understand why they own this ETF. The broker says, buy this Bitcoin ETF, and then when it's down 5 or 10%, they'll sell it, and they haven't really thought much about it. But that's not a great person to have in Bitcoin buying space, but they do have a function in that they are bringing ultimately a large sum of capital. Yeah. There's one group of folks who say, well, if you have Larry Fink and these others, and they have so much of the market that they're going to control the market, but they're speaking nonsense, because nobody can change the path of Bitcoin. The vector that Bitcoin is on is immutable. It's unchangeable. It's unconfiscatable. It's not proof of stake. It's proof of work. Proof of stake would be like a fiat money world. The more fiat money I make, the easier it is for me to buy influence in Washington to change the law, to make it easier for me to make more fiat money. And that cycle has been going on, and it gets worse and worse and worse. But Bitcoin, like Michael Saylor, who has billions of dollars of Bitcoin, cannot change the protocol. He cannot change the outcome of the hash rate. He has no influence over it whatsoever. And So, and it's very democratic in that sense. If you're a lefty and you believe in democratic principles, you would want to own Bitcoin because it's not proof of stake, it's proof of work. It's like it's a meritocracy. You work, you get paid, it's unconfiscatable, and it's good for the rest of your life, and it's good for the next 1,000 years. Isn't that a lefty agenda?
This is exactly the lefty agenda. I'm so glad you put it in that context.
I mean, I work at an auto mechanic in Detroit, and I want to make money that they're not going to inflate away to garbage. You know what I'm saying? Boom! Right? So why would I not want Bitcoin? Why isn't the United Auto Workers Union not arguing to be paid in Bitcoin?
So there's Max Keiser, known for his insight into the world of finance, offering his thoughts on Bitcoin. Despite Bitcoin's reputation for wild price swings, Keiser sees a deeper stability underlying its volatility. He points out that while Bitcoin can experience dramatic ups and downs in the short term, its long-term trajectory tends to be upwards, with each dip followed by new highs. His observation about Bitcoin's recent surge from the 50,000s to well over 60,000 in just a few days underscores this point, hinting at the potential for even greater gains ahead. Moreover, Keiser highlights the growing interest of institutional investors like BlackRock in Bitcoin. This institutional endorsement could further legitimize Bitcoin as a store of value and drive its adoption amongst mainstream investors. By making Bitcoin more relatable and understandable, Keiser is helping break down barriers to entry for those interested in exploring crypto investments. He not only explains Bitcoin's potential for growth, but also emphasizes its roles in reshaping the future of finance. As more people become aware of these possibilities, Bitcoin's journey towards mainstream acceptance and adoption only seems more inevitable. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.